Alright, welcome everyone to this very impromptu video that I really want to just film for the last official video for this year. And so as seen in the title, we're going to first start off with the technical analysis of RIVN, and we're going to go through a bunch of other tickers and companies that you guys have to be looking out for into the end of this year, which again, we don't have much left, and into early next year. So without further ado, let's begin with RIVN. So RIVN has been pretty much sitting at its lows, right? So after it fell off a cliff from its IPO days, and if you guys remember from its IPO days, this one was obviously very overvalued, and I don't think even technical or fundamental analysts were really arguing about that. And so with RIVN, I opened up at $106.75, which seems very far away compared to where we are at now. And it hit an all-time high price of $179.47. And if you guys remember, this company was originally hyped up due to the fact that Amazon was invested into this company. And so if you go all the way back down now to where it's currently sitting at, the price has basically done nothing for the past almost 3 years. And so with this massive move down and this overall, I would say, consolidation, we're now seeing a pretty nice descending resistance trend line that has been forming since mid to late July of last year, all the way up into this month of this year. And so as we're heading into 2025, it seems like there's a possibility for this price to finally break over this descending resistance trend line, which has now become a part of a very massive macro inverted head and shoulders chart pattern. So seen here, this is the left inverted shoulder, and then this is the inverted head. And currently, we're in the process of forming this inverted right shoulder. So I would assume, just based on the technicals here and based on what I've known about this specific chart pattern, this inherently bullish chart pattern at that, we should be able to see a very nice breakout around early to mid-January of next year. Now on the weekly time frame, I love the fact that we have seen basically 4 official retests at this descending resistance trend line. And I love the fact that last week we're able to retest this major horizontal resistance level, which was used as a level of support previously as well, as seen here as well. But now it's used as a new level of support once again, right? And so as long as the price continues to tighten up below this descending resistance trend line, this weekly 10 SMA should continue to curl up higher until it crosses over this daily 21 SMA, my light blue line here, officially giving us that shorter term bullish crossover. And eventually, once that occurs, this descending and declining daily the weekly 50 SMA, since we are on the weekly time frame, mind you, should continue to dive lower, allowing the weekly 10 SMA to finally cross over the weekly 50 SMA as well, which will firmly give us a confirmation that from a short-term to a longer-term perspective, we should see a continued move to the upside for this name. And this will only happen if the price continues to tighten up right underneath this descending resistance trend line, and eventually break over this massive inverted head and shoulders chart pattern. And so my price targets, if we do see a breakout to the upside, which will be around, potentially over $15 for an official breakout entry point, we should be seeing the price hitting around $18 first, and eventually I do want to see RIVN hovering around somewhere between $22 to around $25. So around this range that I've put here between these two horizontal level. So again, 21.50 to around 25. You just want to round up 24.85. So again, just as a summary here, I want to see a nice confirmed entry point or breakout entry point over $15, and we'll be seeing a potentially a first target hit at 18 bucks, and eventually I want to see a max target range between $22 and $25. And so from this closed price from Tuesday, okay, if you go to 25, that's literally a 76% return from that closing price of Tuesday. Right? I mean, that's a huge return. So if you get to $25, then hey, you have a 76% return on your hands. All right, now I'm also kind of bullish on RIVN because I've been seeing a lot more RIVN cars on the road. I mean, that's obviously just a simple observation, but if you take a look at RIVN's lines of cars, I think I've been seeing a lot of their pickup trucks lately in California, in Southern California, which shouldn't be too surprising because we do have a lot of electric cars like Teslas and other variety of options of EVs, but RIVNs have been making their own statement by seeing, well, I've personally been seeing subjectively a lot of RIVNs on the road, and I've been seeing their R1T pickup trucks and their R1S, which is their SUV lines of their EVs. And so as long as they can continue to, I guess, do well with sales, they should be able to eventually break even, 3 to 5 years down the line, right? So obviously I don't think they have what it takes yet to become break even, but hey, maybe something could happen in between the 3 to 5 years that I'm looking for a break even a target for their company. But so far, RIVN has been getting some ecstatic reviews from its drivers and just a lot of compliments about whether or not they want to purchase a RIVN as their next car or not, right? Especially after they've driven one or after they have already purchased one. It seems like people really want to get another RIVN car after driving one for a while. So that's a great sign for a good loyalty, good loyalty base, from its customers, right? So again, EVs tend to be a very hard industry to be in. But if you take a look at Tesla, there's a huge loyalty base from its customers, and RIVN could be on its way to really drive that loyalty from its current customers and potentially future customers as well. All right, so that's kind of the reasons why I think RIVN could be potentially heading towards, maybe $25 next year maximum, but we shall see. We shall see. All right, so the next ticker I want to take a look at is GEV. So this is GE Vernova, and this is part of the companies that split up for General Electric. And I initially alerted this back in September in the official CFO Swinger Watch report. And if you guys remember, we're looking for an entry point, like I said here, over $201.20. And if you take a look on the daily time frame now, we're taking a look at this and taking a shot at this because we had a very nice descending resistance trend line forming with a very tight consolidated price action before we saw a large breakout to the upside. And on top of this, we saw a lot of institutions coming into this stock here, and it was getting a lot of quote-unquote hype from analysts as well, from official banks and institutions. And so to me, that was a very, very bullish sign, just the fact that these people were coming into the stock and buying it up as it continued to make all-time highs when it's just became an IPO, right? It became public in April of this year. And so after making a solid base between 159 to 184, it made this very nice high and tight flag right underneath this all-time high area or level, and eventually broke over $201, and I was able to sell around I think it was 212. So to me, from an equity standpoint, since it was an equity position, that was a great risk to reward ratio return. And so obviously I completely botched that trade as it continued to rise up higher and higher and higher. And then eventually it broke that $300 psychological level, and I completely completely took my focus off of this name right after I took profits, and I just didn't bother to look at it again, even though I had such a bullish analysis on it. And again, this is what happens when you have such great charts during a bull market, where you can't really try to focus on one single stock because you might miss out on another stock that has such a great technical setup, great fundamentals, and eventually gives you a great breakout as well. And so those are one of the, I guess, cons of a great bullish market, where everything is just driving up higher, and you can't just have multiple positions and diversified everywhere, right? You need to be concentrated on single stocks that are breaking out, maybe at least 2 to 3 stocks that are doing great, so that you can actually grow your account without being diversified so much during a bull market where you don't really see much return, right? Because all these individual tickers are doing their own thing, and sometimes more than half of the tickers that you're in may be performing bad, while a small portion might be performing good, and that might be a portfolio killer when you're in a bull market, right? So you want to be concentrated in these names, and that's the reason why I completely forgot about GEV, because during that time we also had other tickers that were performing really, really well. So with that in mind, I still think that GEV can be a good trade, especially a redemption trade for me, since I completely botched this one. So first of all, it's making an amazing bull flag here, which I think will continue to form as we head into the end of this month, and possibly for a breakout into early January. So right now we're making this very nice descending resistance trend line, and Tuesday, which is yesterday for us, since the recording day is on Wednesday right now, which you guys should be watching it now tonight as well, since it came out tonight. You guys should be able to see that the price has been able to retest this descending resistance trend line for the 3rd time. Obviously my drawing is not perfect, but there it is. We have our 3rd retest, and we have a very nice all-time high level support sitting at 317.50, and the price has been moving sideways ever since November came along. And I love the fact that after a major breakout, we're about to see the daily 50 SMA being held up or not. But first, obviously the initial retest, the price was able to uphold this daily 50 SMA as buyers came back in to defend the price from breaking further below and officially starting a new downtrend. And so I love the fact that this stock has been able to uphold the daily 50 SMA, but again, as the stock continues to consolidate and make its bull flag here, it will continue to try to retest the daily 50 SMA. So ideally, you will want to see the price breaking over this descending resistance trend line and eventually breaking upwards for my official all-time high target for this ticker at $400. Okay, so again, I really want this ticker to reach $400 before seeing an immediate rejection and eventual correction for this stock into 2025. Because again, it has doubled, nearly doubled since our entry point here, right? So if it reaches $400 and even a little bit over 400, that will officially be a double from 201.20. All right, so obviously again, completely botched this trade personally on my side, but hey, you win some and you lose some as well. Obviously this one was a winner for me in my eyes, but it could have been a lot larger winner here. So the GEV, definitely focus on this one as we head into the new year. We are seeing a very nice bull flag here, and if it does break out from where I wanted to break out around 350, okay, so if you just want to do a quick view here, okay, so if you go up to 400 or even to 401, that's around a 15% return from this 350 breakout. All right, so the next name I want to take a look at is UBER, okay, Uber. Right, so this one has been talked about a lot on every single stock trading platform and on FinTwit as well. And the reason being is that it has been completely shattered to the downside after making a new all-time high back in October 11th of this year. And all of this kind of fear that's been driving the stock downward has been due to the fact that there have been other auto taxis, right? These taxis that are basically driving itself, right? So for example, if you haven't seen these cars in the US, if you guys are outside of the US, we have these cars called Waymo. All right, so this is a company, driverless cars, so driverless taxis, these auto taxis that are partnered with Google. And they have been making some waves here in California, especially in NorCal, as they continue to expand their operations and not just concentrated in, huge cities like San Francisco or like these big metropolis cities, but they've been continuously expanding to more rural areas as well. And this is looked upon as huge competition for Uber. However, from my personal opinion, I don't think Uber will have too much of a trouble trying to establish their own automatic taxi service, right? Their auto taxis, because again, Uber has had decades and just more recently, years of experience of data collection from its Uber drivers, and also just having its own, platform as well. They have basically, what I'm trying to say here, foundation. Right, they have their own foundation where I think it's going to be, well, personally for me now, it's too easy to say that Uber is not going to be making it into the auto taxi quote unquote industry or market, or like as people have been saying that they don't even have a spot in this new wave of auto taxis, right? In my personal opinion, I don't think that's going to happen for Uber. Again, they have the foundation. They have the years of experience. And I think if they want to incorporate an auto taxi service, I think they can do phenomenally well. And that's the reason why so far we've been seeing this move down. But with this FUD that's been created on Uber, this FUD, right? Fear, uncertainty, doubt. I think this is a great opportunity to literally dip buy as we head into 2025. And by the end of this decade, I truly believe Uber will have their own auto taxi service to directly compete with Waymo or even like Tesla with its new taxi service as well, right? Well, I don't know if it's going to be coming in or not by the end of this decade, but we shall see for Tesla. That's another subject that I can talk about for another day. Okay, so with that in mind, so for Uber, we're now seeing a potential pivot here, kind of a hook, a fish hook chart pattern is what I would like to say, where it could provide us with a very nice mean reversion move back to the upside. Now, if we were to move back to the upside after it held the previous pivot low point right around on this daily candlestick, so at the lows of $54.84, we could potentially get back over to $63 and potentially range between a wide range of 63 to 70.50. And the reason why is that, well, the price was able to do that multiple times at previous points here on the daily time frame. So if you were to try to consolidate this large move down, so again, if you guys want to see a percentage move down, the actual percentage move lower, we moved from all-time highs to the current pivot lows, and that gave us a negative 30, almost negative 32% move to the downside. And so this is a fairly large move, obviously. And so if the price really wanted to consolidate between 63 to 70.50, that's a good range and a good amount of time for it to go back and forth between this range to fully consolidate this downtrend and potentially restart a new uptrend back to the upside and potentially come back to the previous all-time high levels. So for now, I really want to see this name continuously upholding the previous pivot low point here at 54. So right here, 54.84, and eventually break over $63. All right. Now the next one is DDOG, Datadog. So this is an absolute doggo stock here. Why? Well, this was officially in the previous CFO Swinger Watch report as well. And as seen here, this was the official entry point that was given for that specific week in the CFO Swinger Watch report. So it was a long bounce at 122.10 or over 123.50. And those two entry points couldn't happen more perfect for this swing trade, because after that nice bounce off of 122 or even 123.50, the price was able to retest on the daily 200 SMA. And if I want to do a little flashback here, okay, I think it was right around here. Okay, I also mentioned that before we saw an official retest, as seen here on Monday and Tuesday, I expected the price to come back down to retest the daily 200 SMA is what I told my readers and members. And if we do see a retest, I expect a bounce back to the upside for the daily 50 SMA to finally catch up as well. And if that happens, we could potentially be seeing a golden cross as the daily 50 SMA crosses over the daily 200 SMA. And so guess what happened? All right, so if I play here, we had a nice entry point over 123.50, or personally for me, that's where I got my entry point. And then we had a massive, very quick move to the upside. And currently we're starting to consolidate now as we hit a new high and reached my maximum target of 169, or at least the next psychological whole number level of 170. Okay, so if you take a look at this candlestick right around here, right, we hit a high of 170.08, and I believe that is the new 52 weeks highs as well, since as previously seen here, DDOG has been consolidating for the entirety of this year until it was able to break out back in November, where we got our initial entry points. And so for DDOG, I am very biased since I do have a position, and I have added to this position as well this week, especially on Monday, little hint. And I really hope that this stock continues to uphold the gap ups and its massive breakout it had. And I really hope it doesn't try to further move lower from this point forward, because the price has been able to uphold this 144 whole number level, or it was pretty close to my previous resistance level of 143.50, but we can just flip it and round it up to 144. So this support level has to hold here as the daily 50 SMA continues to catch up, and eventually once we're able to move sideways and entangle with the daily 10 here and daily 21 SMA here, the light blue line again. Daily 10 is my red, daily 21 is my light blue line. We should be able to see some good sideways price action around this, maybe around below 152, and eventually we'll be able to break over 152 and break over and reclaim both of my short-term 10 and 21 SMAs. All right, so if you take a look on the weekly time frame as well, this is just really good consolidation as we continuously see lower weekly volume here. And as we continue to move lower and consolidate, we're going to eventually retest with the weekly 10 SMA, which will provide more buyers to come in to try to catapult the price back up higher for the next leg up higher as well. All right, and with that, let's take a look at SQ. So SQ is also a ticker that was in the CFO Swing Watch report along with DDOG. So if you guys remember, if any of the readers and members are watching this video now, you guys should know that we're looking at SQ. So here's the official entry points, right? So we're looking at SQ on this week right here, right? So on the weekend, right before this Monday's candlestick here on November 18th, we were looking at SQ in the CFO Swing Watch report, and I gave a full breakdown, a full technical and fundamental top to bottom analysis on SQ, and I gave the reasons why we should be bullish on this one. And obviously that same analysis, the entire top to bottom fundamental and technical analysis, should be carried over to 2025 because of how great it looks from technical standpoint and from a company standpoint, from a fundamental standpoint as well. So you guys should come back to that report and try to read that analysis once again as we head into 2025. So I'm not going to be on this ticker for too long, but from this entry point so far, which I've grabbed one as well, over 85.20 as seen here, okay, we're able to see the price coming back down, and I was able to again add a little more, just like DDOG. So again, I'm a bit biased here, obviously, but I'm biased for great reasons. So if you're able to, again, just like with DDOG, see the daily 50 SMA continuously rising up higher to catch up to the price while the price continues to stay above the daily 50 SMA, we should be seeing the daily 10 and the daily 21 SMA entangle with the price, consolidate, maybe right underneath 92.50 or 93 if you guys just want to round up, and we should be able to see another retest of the current pivot high point at $99.26 or 99.26, and possibly even have a new higher high pivot point once we do hit that magical 3-point psychological whole number level of $100, right? The 3-digit number here. Okay. And then next we have AVGO, the behemoth semiconductor company that hasn't been getting enough love lately, which I think deserves a lot more love here because we were able to grab some very, very good long-term contracts that are now very, very much in the money since the contract strike price was $230 that expired in September. So you guys can take a look at that. Okay. And the official entry point. Okay, the official entry point was in early November, okay? And we're able to see an additional entry point. Well, this is for me personally. I don't know about the members here, but since they do have their own decisions to make, right, I'm not going to be telling them exactly what to do. I've been giving them amazing analysis, and it's their choice to take action or not. But I continue to add right around here into late November. All right, and hopefully I don't get the dates wrong here, but if I did, my apologies. You guys could just go back to the private CFA Discord to see when I did mention it and when I did enter it, but again, and just take a look at it. But I'm not going to be showing to you guys right now in the Discord, but for AVGO, we should be seeing a very nice breakout over 164 and an official hold, and eventually we should continue to move up higher and higher and higher. And eventually, this is exactly what we got as earnings came around. And I was net positive on my position from all my ads. And I was able to hold through. And guess what? We officially broke out higher with huge, huge momentum, with very, very good bullish sentiment and bullish volume. We just take a look at the volume bars here, right? The green volume bars especially. These volume bars have completely outshine the green volume bars that we've been seeing ever since AVGO has continued to move sideways here, right? And that occurred around July, right after its stock split. Again, it was a 10-for-1 stock split here. So what should we expect now, right, for AVGO into the new year? We should be seeing the price continuously flagging out. I expect some sort of at least a wedge chart pattern, or at least a nice bull flag to form here as it continues to use this huge gap up, and obviously that drift higher after post earnings drift higher as a flagpole, and as it continues to consolidate, hopefully making lower highs and higher lows. Okay, we should be able to form this very nice potential flag here. Okay, and apologies about that. So with AVGO, we should be able to see potentially a good breakout out of this flag if we do form it. And there are rumors that these analysts are potentially looking for $300 for the next target price for AVGO. Now, personally for me, that's a little bit too much. I mean, if you take a look at the monthly or even the weekly time frame for AVGO, this is a massive run up, right? So just take a look at it from a candlestick chart and take a look at the RSI. I mean, this is huge, right? The RSI on the monthly time frame has been overbought for many months, actually, including this entire year. It's been overbought, right? Not just for months, this entire year. So obviously that's a great sign too, because overbought does not mean immediately that we should be seeing a correction, but it just simply states that the buyers are present, very much present, on both the short to long term perspective. All right, and here's the second to last name Bros, right? BROS. So this is the coffee chain, or not really a coffee chain, but it's a chain that should be compared to Starbucks, right? This Dutch Bros company has been doing absolutely amazing. They have more opportunities to expand since they're kind of I would say their layout for each location is very, very shrewd. It's very, 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 very smart. As if you haven't seen one before, the Dutch Bros, they take up little real estate and a part of a huge mall, or just a little like a plaza, right? They have a little shop in the corner of a building, and they can actually save a lot of money for rent, and obviously or at least whatever it may be for the company. And they have very, very small space, but they're able to do really well with each individual store. I mean, even that small space, they're able to put in a drive-through as well, and they worked really, really well too. It's a very effective system that works even with the employees itself. I mean, I really haven't had a bad experience from them, even though Dutch Bros is not really close to me. But whenever I do get a chance to go there, they do really, really well. There's a huge line of cars through its drive-through when it's available for that location. But again, very impressive, very shrewd the way that they operate their business here. And Dutch Bros has been on our radar. Okay, if you go back to my technical analysis here, it's been on our radar ever since this very, very massive descending resistance trend line that we've been watching since 2022 and 2023. And this obviously also looks like RIVN, right? If you take a look at this, it looks like RIVN, right? With a very nice descending resistance trend line. And if you take a look at it on the weekly time frame, it's a massive consolidation and a big fall from its IPO days and IPO highs, or all-time highs actually, like RIVN, and it was able to form a very nice consolidation range between 25 to around 32, and now it's been blasting off higher and higher and higher due to its recent quarterly or earnings here, and it was able to drift up higher post earnings with some great momentum. Now, I'll go back to the weekly time frame here, but on the daily time frame, the price has been consolidating absolutely well. I mean, this is just amazing hold of its earnings gap up as it made higher highs and higher lows. This is just a textbook uptrend right after its earnings gap up, and now it's consolidating between 55 to around 52. So if you guys can see it, here is the current daily support level, and there's that intraday resistance that I've drawn here around 54, but let me actually move it up to 55, right? And so as long as it's able to continue to ride the daily 10, okay, which has been fully caught up to the price, along with the daily 21 SMA right here, which has also been caught up to the price as well, the price should continue to move sideways and eventually break over 55 and potentially head back to that $60 whole number level and reach my ultimate ideal max targets of $62.64.50, right? So $62 and $64.50. So this is a good supply area for a solid rejection in the longer term perspective. All right, so again, as long as we're able to break over 55 with some good bullish momentum, which it currently has been seeing, and the fact that as it continued to make all higher highs and higher lows, the RSI has also recalibrated back to more optimal levels to further provide a surge in bullish momentum and bullish buying and bidding to come back in. And so if you're able to break over 55 again, we should be seeing a good retest of at least that psychological whole number level of $60 and eventually my maximum targets of $62 and $64.50. And last but not least, we have ACVA. So if you guys probably have not heard this name before, but this is ACV Auctions. So this one is obviously a company that is involved in auctions, but specifically for cars. And I do have some good knowledge about the auctions so far. I have a friend who works in auctions, and he has been telling me that throughout the country here, throughout the nation, auction activity has been increasing ever since 2022, and it's reaching a fever here this year as financial conditions continue to tighten up as inflation continues to be sticky for especially for in the auto industry, right? Especially for insurance, okay? And ACV auctions, obviously it doesn't have to do anything with insurance, but overall this entire market, right, this entire industry or sector has been seeing sustained high prices. And so people have been seeing and looking towards auctions rather than even buying, used cars, right? As the used car market also dies down, auctions have gotten a new light and a new favorability from people as they look towards auctions to get their next car, right? Or maybe even the next fixer-upper. Maybe they want to buy an old car and fix it up and sell it for a new price, right? So auctions have been doing well, and if you guys see here, ACVA has actually broken out as we head into the end of this year and into next year. So after a massive consolidation between $17 and I would say 19.50, but if you guys want to round up to the whole number level, you guys can do that. There's no problem with doing that. It's only a 50-cent difference to $20, that is fine, right? So 17 to 19.50 or $20, that's great, right? You guys can use these levels, but as long as the price is able to stay over and stick over this $20 level, we should be able to see a continued curl up higher as we head into this new year. And so for my official target, I'm initially aiming for $26, right? So from the closing price from Tuesday, okay, if you go all the way up, if you go to 26, that is nearly a 20% return. Okay, or it is actually a 20% return from Tuesday's closing price. So this ACVA, I really want you guys to keep an eye on this stock because it could be a potential huge return if you do get a nice position, a very good entry point over $20. All right, so remember what I told you guys about auctions. As we're seeing auction activity continuously increasing and nearly reaching a feverish pitch for volume wise, right? As more people continue to look for auctions for cars. All right, so that is it for this very impromptu video. If you liked what you heard, please leave a thumbs up down below and hit that subscribe button. Now, if you're new here and you want to join the CFO Survival Watch Report and become a private member of the CFO Discord, you can get 50% off for your first 30 days. It's a first come, first serve basis. So all you need to do is DM me on Instagram at ChartsFocus1 to claim your spot. But if you want to join now, right? If you want to join now, you guys can simply take a look at the description box down below, and you guys will find the link that will send you to the subscription. So again, you guys will have different tiers to choose from. I like to give you guys options, so you guys can take a look at that if you guys want. But if you guys don't want to, miss out on this opportunity, which is a great opportunity, you guys can just DM me on Instagram at ChartsFocus1 to claim your spot for 50% off for your first 30 days. So make sure you guys DM me on Instagram. All right. Thank you so much for watching, and I'll see you guys next week.